If you're wanting a low risk way to play any downside or upside move, in this video I'll show you how to do that using what we call, in this example, I'll show you what we call a directional butterfly vacation butterfly trade setup. So this is Facebook, and you can see that it's really starting to roll back over pretty weak. I had a good move up, but faltered and turned back over. You can see our momentum starting to slip to the downside. So one way to trade a short trade setup in this situation is to do what we call a target trade. And I'll be looking to target down here this 200-day or 200 period moving average, which comes in about 170. So what I'm going to do is show you a setup, and this is what we call a balanced butterfly targeting 170. And we're going to do it for very, very low capital at risk, but it's going to have a super high return on that capital. And it's going to be one that you just put on for low risk, about 20 cents or 20 bucks per spread. And then you come back in about, usually about 3 to 2 days before expiration to start managing the trade. So this is what we call a butterfly vacation trade setup. And this would be for a downside short trade setup to this target of 170. So let's take a look. So we're going to target 170 to the downside, and this will be for next week's expiration. So we're going to use the March 9 series, so that'll be next Friday's expiration, and we're going to target the 170 target, that 200-day moving average, which is coming in at $170. So we're going to use the 170 strike, and we're just going to do a balanced butterfly. So we're going to buy the 172.5 put, sell the 170, and then sell the 170, buy the 167.5. So $2.50 wide spread. Get into that spread right now for about 20 to 23, 24 cents. So that would be your risk. Maximum risk would be the debit paid here. And then your maximum profit will be if it goes out at 170 next week. You can make the difference of 250 less your debit, save 20. So you could theoretically make $230. So right now it's flat, and so you're going to get the real movement and the real payoff about 2 to 3 days before expiration and into expiration. So that's why it's got its nickname, the vacation trade. So you put it on and you come back later to manage the trade. But you want to do these for very, very low directional risk. So you're risking, about 20 cents or 20 bucks to make potentially over 200 or anything in between there when we look into this profit zone or profit tent. All right, so I hope that helps, and I'll talk to you on my next video update.